Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. The U.S. equity market faltered a bit today. That was after President Trump said he is expecting tariffs planned for Canada and Mexico to go ahead in early March. Now, these levies, you may recall, were initially delayed by 1 month. That is a way of giving Canada and Mexico some more time to address the president's concerns over border security. Joining me now is Rebecca Walser. She is president at Walser Wealth Management, joining us from Florida. Good of you to make time to chat with us. It seemed like the market was holding up reasonably well until the news on the tariffs broke. What is your sense of the risk right now for equities if, in fact, the U.S. were to impose new tariffs on Canada and Mexico?
Well, certainly, Doug, it's more volatility, right? Uncertainty breeds volatility. The markets don't like uncertainty. And this is something that I think maybe wasn't quite being expected. If you look at a statement out of Melanie Joly, who is a Canadian finance minister, she basically said that the U.S., this is a very interesting sentiment, she said the U.S. is a net importer. Like, we basically are importing more guns, more fentanyl, and more migrants to Canada than they are to us. And so she said that that would be something that would need to be looked at quite extensively if these tariffs do in fact go in force. And I think that there was a general sentiment, Doug, that since Trump was so willing to delay it just by a month to get control of the border and sort of get control of this fentanyl/migrant issue, that there might be some ability to continue to work through that. And the fact that today, when he was with Macron from France, said it was so very clear that they were on track to continue to go into effect next month, that it was quite a reverberation through the markets. Yeah,
next week, more like it, right? I'm wondering whether or not you're hopeful that maybe we can get some type of negotiation working here to avoid the worst case scenario.
I mean, the thing is there's negotiations on so many fronts, right? We have not only the Mexico-Canadian situation, but then we also have him talking about a lot of things in March. March 12th, we've got the steel and aluminum one that's supposed to go into effect 25%. We already have the 10% Chinese one. And then he's obviously talking about a lot of the media refers to as retaliatory. But of course, Trump talks about reciprocal, and that if there is a country, and this would be countrywide, specifically looking at Brazil and India directly, but countries that are putting, tariffs on their imports into us that we don't like, likewise, and like manner tariff the goods that we're exporting to them, that we would reciprocate tariffs so that in his world, it would be a more balanced country to country trading environment. So there's actually a lot that is happening quite quickly, and it's going to breed a lot of volatility, Doug. That is what it's going to be in the short term, a lot of volatility.
Can we talk a little bit about artificial intelligence? We had this report today from an analyst at TD Cowen saying that Microsoft has canceled some leases for its U.S. data center capacity, and I think that raised a lot of worry over whether or not Microsoft is securing more AI computing capacity than it needs in the longer term. And obviously, Wednesday, after the bell, we have the numbers from NVIDIA. How are you feeling about the AI trade overall?
Yeah, this is a different space right now than where we were the last, I would say, 36 months. And that is obviously related to the DeepSeek situation. Because you had NVIDIA come out, the CEO come out and say that functionality that DeepSeek obtained was through legal chips. In other words, it wasn't these advanced, super expensive chips that are banned and are not allowed to be exported to China, but they were with some lower level chips that were legal, and they were able to. Not everyone believes that the IP was stolen, as is China's MO, but doesn't matter if what the end result doesn't matter. If the end result is that we can get much cheaper AI development on lower level chips, much reduced costing chips, then that does have a huge implication for the research and development that is happening by all of our Mag 7 into AI and into the AI frontier. And so what we really need to do is really figure out what is this technology that they have reduced these lower grade chips to, because if in fact that is come to fruition, Doug, then why would we have as big of an R&D spend? It's really I don't want to say it this way, but it's a CTJ moment for the AI space of what does it really take? How much money does it really take? And it will impact the Mag 7 R&D investment accordingly.
Yeah, and today we had news that Apple is going to produce some AI servers here in the U.S., spending about $500 billion domestically over the next 4 years. And I was just dumbfounded by the fact that Apple is going to hire 20,000 new workers to this end. Is Apple one of the ways that you want to maybe play the AI trade here?
Yeah, I think that this is in part, obviously not totally, but this is definitely in part with Trump's very strong stance against China and really talking about going after. I know right now he's focused on tariffs, but he has been a very, very staunch defender of the dominancy of the U.S. dollar and very much wants to go after China for IP problems. And I think Apple is already so embedded with their phone production in the Chinese world that maybe they're seeing a different light for the development of the AI space and data centers outside of and apart from China, especially if we do see Trump really go after the IP intellectual property theft that we know that exists on an ongoing basis and the production, and intellectual property as well as actual hardware out of China.
So let's talk about another aspect of geopolitics. Today marks 3 years since Russia invaded Ukraine, and Ukraine today saying it's in the final stages of talks with the U.S. over a deal to give Washington a cut of Ukraine's natural resources. Does that surprise you at all?
I think what's more surprising is how this administration has already been able to convince the UN to sort of change its policy or its directive on the fact that Russia instigated the war. I mean, this is phenomenal movement here that we've seen, Doug. I mean, obviously, the invasion happening, I call it the invasion, but, going back to March of 2022, and that being the world's understanding of how that started, and Trump being in office less than not even 5 weeks and already getting, the UN to change that stance and even going against some of our Western allies who don't agree with that. So there is definitely something afoot, which is a weird way to say it, but there's definitely something going on between the semantics between the Ukraine-Russia-US relationship. And I do believe that Zelensky feels that he doesn't have nearly the ally in Trump that he had in Biden, and that he's going to have to play a little bit of a different role than he's been playing. He really is starting to get a little bit out of steam, out of blocks to play, if you will.
So, Rebecca, how are you feeling generally speaking about U.S. economic growth these days?
I mean, I think that if it's really kind of a tale of two worlds in two ways. The first thing is that when the Trump election happened, you saw the global world really think, okay, this is great. And all of the M&A activity, hedge funds, everyone excited, investment banks excited. We're going to see a lot more M&A activity, a lot of more deals globally, and all of these things. And there's a lot of enthusiasm. Both the CEO and the CFO survey show that yes, 60% plus were very positive to the upside under the new incoming Trump administration. When you look now at what's happening and looking kind of beneath the sheets, you're seeing in America alone, less than just over 10% of our economy is spending just under all 50% of all consumption. So we really are now seeing a truly bifurcated economy. We have retail sales dropping in January. We consumer sentiment dropping from December to January. We have CPI and PPI ticking back up and being sticky again, showing that inflation once again is going to rear its ugly head and be a problem not only for Trump but for Powell to navigate. So you have all of those things happening, and then on top of that, you have the protectionist tariff policies, which I'm not saying I'm for or against. I'm just letting the markets know they are disruptive. And anytime you have disruption, you get volatility. And anytime you get volatility, you're going to have to time the market just right, or you're going to have to go for the long value plays and not try to get the price action that you might have otherwise tried to get on the upside. So all around, it's disruptive, it's volatile, and we need to give this probably a good 3 months out to really have an understanding of where we're going to be with this administration over these next 12 months.
It's always a pleasure to talk with you. Thank you, Rebecca. Rebecca Walser there, president of Walser Wealth Management, joining from Florida here on the Daybreak Asia podcast.